Hi guys, welcome to honeystocks.com weekend analysis for the 12th of January 2019. Now, most of you already know that I'm kind of taking a 6 week break, vacation time, just to get away from the Scottish winter, which is pretty brutal. It's not particularly nice. So I've been learning to snowboard in Whistler. I've been in Tokyo, Okinawa. I've just arrived in Hong Kong today, and I'm currently on the rooftop bar of my hotel, overlooking the Hong Kong Bay, which is pretty cool. So, as always, I've got a bunch of charts for you. I've got, I think, 15 to 20. Because I've been off the grid pretty much for the last 10 days or so, I've been very inactive with my emails, etc. I am going to get back to everybody over the next 48 hours. I'm going to be in Hong Kong, I think, probably for the next week to 10 days. So I should be a bit more settled here, less travelling around, etc. So yeah, hopefully you get something from this. And if anybody has any thoughts, any questions, any comments, you all know the drill by now. Just comment below, and I'll get back to you. But yeah.
As always, guys, before I get into the actual charts, just please pause the video, make sure you're comfortable with that. Those of you that have followed me long enough know exactly what this is. It's basically just saying that it's not any investment advice, all uh, information, all the charts. Do your own due diligence. Don't go into any of these blindly because you're responsible and I am not. So I'm obviously registered with the CMT Association. Technical analysis is what I'm widely known for. I'm working my way towards my chartered status at the moment. And I think it's fair to say that despite the market being on a complete rocket ship over the last few months, I know there's many of you out there that are struggling with positions that you've held, that you're continuing to hold, maybe some bad decisions that you've made in the past. Maybe you want to get better at your decision making in future. If you're one of those people, then you can maybe stick around for a couple of minutes at the end. Now, um, if you do enjoy this, as always, please do subscribe to our channel. Bottom right hand corner, there should be a little subscribe button and obviously the notification bell as well. And what I'm going to be doing this week is running through a lot of the charts that have been requested from you guys, from the YouTube comments, from social media, Facebook, Instagram messaging, etc. etc. So hopefully you get some kind of insight into this. Now, because I'm obviously in Japan at the moment, I've just not had time to respond to all the emails, the messages, etc. So I'm actually going to be extending this offer for another 7 days. So if you are somebody out there that is struggling at the moment, we are going to be extending our New Year offer by another week. So let's just dive into the charts. So I'm going to start off this week by just quickly touching on the relative rotation graph. Now, we know the market has been blasting forward. I think most of us are quite happy at the moment. If you're not happy, then again, it's probably just coming down to simple things like stock selection, maybe the areas of the market that you want to be focusing on. But what we can see now, if we think about the relative rotation graph, we get rotations into any given sector at any given time. It's just one big rotation. Now, what we can see at the moment is there's a bit of a rotation, at least in the short term, out of some of the semiconductor stocks. We can see that some of the cloud tech stocks, the computing ETF, is starting to move. iPay, which has been a massive performer over the last 12 months. And we can also see that we've got biotech starting to move into the lagging area. Now, what our job as technical analysts is to really identify the strongest stocks in the strongest sectors and profit from them. I'm not somebody that's out there bottom fishing. I'm not trying to, pick the bottom of a beaten down stock. That's not my game. I find it easier to trade with the strength. That's my approach. But hopefully this rotation graph can give you some sort of insight. We've obviously got tech continuing to move, but as we're going to see in just a second, there are a couple of little concerns that I've got. Now, obviously, when we look at the relative comparison chart, if we think about the S&P 500 as the benchmark for the overall market, you really want to be focusing on areas that are outperforming the market, and these are just three of the areas over the last 12 months that you would probably want to be. I mean, semiconductors is up 56%, tech 48%, the payment processing 37%, and the S&P has done very, very well at 25%. But that should hopefully give you some sort of idea, if you didn't know already, what you should really be looking to do in order to outperform the market. Now, a couple of concerns. Now, this is the mid-cap index. Okay, so this is the S&P 400 ETF MDY. Now, what we can say is if the mid-caps do break out, then that's another bullish signal for the market. Okay, it's definitely not a bearish signal. But the one thing that I am quite cognizant of, is that the market is massively overextended. We've got the fear and greed index, just blasting higher. We've got the major indices, trading at all-time highs. It stands to reason at some point there's going to be a little bit of a pullback. Now, nobody knows how deep that pullback is going to be. You'll have all the CNBC analysts, all the Bloomberg analysts justifying every little 1 or 2% move in the market, when the reality is absolutely nobody knows anything. All we can do is really just react to what is happening. Now, if we get a rejection here in the mid caps, that would suggest to me, and that would be logical to me, that resistance in a key area of the market might have a trickle down effect to other areas of the market. Now, obviously, those of you that follow me, every week, every 2 weeks, most of you will have seen this chart already. This was published by the Chart Report, a hugely popular trading publication. And a lot of technical analysts see what I'm trying to get across with the chart. And I think when we see that we've got, 8.5% trading above the 30 period weekly moving average, that in itself, when we look historically, we can see that whenever we get into above 7%, we do tend to get these pullbacks. Now, it could absolutely be the case that it just retraces a few percent and then it keeps going higher. I would be very comfortable with that. I love a trending market. It's beautiful, lots of money to be made, but I do have a couple of little concerns. Now, if you're out there and maybe you're in some of this big, some of the software names, for example, the cloud stocks, some of the tech stocks that are attached to the CTF, you might want to just consider the resistance that's potentially incoming here. Hopefully those of you that understand technical analysis, hopefully those of you that understand how the dynamics of the market work, you're probably understanding what I'm saying here. But if you don't understand, then again, maybe want to stick around for a couple of minutes at the end. Now, a lot of you are obviously here because you want to see some of the charts that you've requested. You want to see, are there any entries available over the next week? Now, what I would say at the moment, for me personally, I've got a bit of a cautious hat on at the moment. I'm not getting overly aggressive or anything like that. I do understand that the market is due to pull back a little bit. Lots of the stocks are overextended. So I'm trying to highlight some of the stocks here that are perhaps not as overextended, where we might see a little bit of growth here. Now, Starbucks, as always, I feel like I'm covering this every week for you guys. It's starting to move now. We've got an upgrade during the week from an investment bank, and we got a gap up overnight, and it looks like it's wanting to move. So the thesis remains the same for me. $100 is the ultimate upside objective with that one. Baidu looks like it's closing the gap here. I think somebody on YouTube was asking about this one. I think for me, above $150 probably makes a bit of sense. Um, it's not a stock that's obviously it's not on a massive trend at the moment, but it has broken out. It does look like it's found its bottom. China is starting to move. Um, so if you are one of these value guys that are maybe trying to apply technicals as well, then I think above $150 there makes a bit of sense to me. CYBR has officially broken out. The upside objective with this one, to those of you that have been asking, $150. For those of you that don't know, I highlighted this one a couple of weeks ago and just said, look, this is a support level here, and lo and behold, it's held, it's broke out, and it's off and running. Does look like it might pull back a little bit, or at least move sideways for a few days. But again, it's going to come down to what happens with the overall market, guys. So it'll be very, very interesting to see what happens with CYBR. Okta, congratulations those of you that have been holding through the turmoil. Very, very close to getting yourselves back to $140 here. Another $10 to go. I think we are hitting resistance at the moment. So it wouldn't surprise me to see some sort of price action that looks like that. Maybe a little bit of a pullback to support. And then a further move to the upside. But if it does break out here, happy days. I would expect it to go and test $140 and then potentially look to break higher. Microsoft is obviously one of the biggest companies in the world. I use their products. I've just recently got the new Surface laptop, and I absolutely love Microsoft. Made the switch from Apple, and I think what I'm seeing with the chart, yes, the stock has broken out. It's been performing very, very well, like the rest of the market has since the beginning of November. But I do have concerns here with declining momentum. I think this needs to resolve itself. I think technically there is a bit of a question mark at the moment, and I think you need to just manage the trade to profit. Match Group is very, very close to reaching upside objective. Again, I highlighted this one to you guys on social media a few weeks ago on this. Well, at the time it was a weak breakout, and then it's obviously broken higher, retest, and off it's gone. So I think around $90 is something where you might want to just reevaluate what you're doing. Obviously, if it breaks higher, continue to hold. However, I think technically there's a question mark incoming at the moment for Match. Roku, again, question marks. I think being asked of Mr. Roku at the moment. Those of you that hold the stock and hold through the fire, you're far braver than I. Balls of steel, it's not one for me. But because I'm asked about this one constantly, I think you need to be very, very careful here. I think a break lower below this support level is probably a bit of an issue, and then you really need to be watching that 200 period moving average just to see what happens there. Square Inc. has had a bounce off support. I know many of you are happy with it. I think I'm watching this level here closely, around $70. If it breaks higher, I do think it has a clear run finally to around 82, 83, 18% upside. But this is a stock that I've talked to death over the last 18 months. It's not one that's been remotely appealing to me, but again, because a lot of you ask, this is really how I see it at the moment. I think it's more of a swing trade. I think 18% upside objective. Netflix, there's going to be questions I think being asked. I think we're clearly in a triangle pattern here. Do we continue to see it chop sideways before it ultimately breaks higher? Who knows? But I would be watching this level with a lot of interest. Around 330. I would suggest that it's a good idea for those of you that understand technical analysis, that obviously have your charting software, etc. I would just build in this this triangle pattern on the weekly chart just to clean the chart up a little bit and see what happens there. Etsy, again, it does look like it's wanting to just kind of chop a little bit higher. It's not had a lot of momentum come in, but price is moving higher at the moment. Potential double bottom pattern, 16% upside in my opinion. So yeah, let's see what happens with Etsy. Good old Facebook. Yeah, it's close to breaking out, and yeah, I think above 220 makes a lot of sense. A lot of you watching this will maybe be looking at this from a valuation perspective, or maybe you're somebody that doesn't really understand trend following strategy. You'll be saying to yourself, well, I'm not going to buy this at an all-time high, that's crazy. But then you realize that, well, actually buying at all-time highs, stocks when they're at all-time highs tend to go and create new highs. So never be scared to buy at an all-time high. The problem that I find a lot of traders have when they buy at all-time highs is they're buying stocks that are overextended on technicals. I'm talking about things like momentum, etc. There's a bit of a sweet spot. It's obviously something that I help and coach people on, but yeah, I think we're close to breaking out here, and I'll be evaluating Facebook above 220. ZTS is grinding higher. It's obviously had a breakout at 130. We're up at 135 in the space of a couple of weeks. So yeah, hopefully we're in bullish momentum conditions. We've obviously got volume there. So ZTS, if it's not on your radar, you might want to add it to your watch list. Now, I posted this chart to social media during the week just to highlight good old Tesla. It's obviously performed incredibly well. Now, a few of my guys have got stock and options on this, and this has been absolutely massive. I've not got a position in it, but I'm asked about the technicals all the time. Yes, I think everybody understands that it's overextended at the moment. Yes, a pullback is expected, or at the very least a chop sideways. And the $500 significant round number barrier has been hit. Everybody's profit taking, and we've obviously had a bit of a decline there. I would suggest that if you want to buy into Tesla, I wouldn't look to buy in at the moment. I would be looking for $500 to clear, because I don't want to be in a position where I'm holding a stock at $480 and then all of a sudden it starts to fall away. It can't break above $500 and then you're left bag holding for 18 months. That's the worst case scenario. So I would just be looking for the comfort in knowing that we're moving above $500, and for me this is a logical profit area, but I'll leave it to you guys to decide. Blackstone Group has broken out. I think when we consider that there's a good 37% upside there, I think the chart itself probably makes a lot of sense to you. Gold again has broken out. Defensive play in the market. If we see declines in the broader equities market, I think we can see that there's going to be areas such as gold that probably start to move forward. Treasury bond ETF also is close to breaking out. Two of my guys have got in positions here and they're already working with their options. So yeah, I think this is one to watch for a breakout. Like I said, if we've got a scenario where gold is advancing, where we've got treasury bond ETFs advancing, we're probably going to have to evaluate what's happening within the equities market, like I talked about right at the start of this video. Hopefully those of you out there understand what to do, hopefully you all understand how to approach those types of market conditions. But I feel like it's a good thing for me to highlight this particular week, because I know a lot of you guys follow me very, very closely, and I know a lot of you guys appreciate it when I'm giving a gentle nudge to say, like, let's keep an eye on this. So yeah, TLT, I think is one that you can probably watch. Now, the ultimate momentum stock, Beyond Meat, we've had a breakout here. Quite a few of my guys have got in positions on this breakout. For me, I'm waiting for this $100 barrier to clear. It may become interesting. I think when we consider what happened with its IPO, and obviously the unbelievable move that it had, it wouldn't surprise me in the slightest to see ridiculous momentum come in on a move above $100. So I think with BYND, I'd be watching that one very, very closely. Let me see. We've got Owens Corning. One of my subscribers was actually asking me about this one today. I think we've got a clear support level in play here. So I think we're bullish above that level. I think for new entry though, I think above $6 to $8. We're only a few bucks away. But for me that would make a lot of sense. Now obviously Apple has been on a huge rocket ship. We are in overbought conditions at the moment quite significantly, so I would expect some kind of pullback. I think price will probably look to do something like that. But again, this probably highlights, what I was chatting about with, buying stocks that break out into all-time highs. You buy in here at 230, Apple's just continued to keep making new highs. So it's just about understanding this, guys. It's not difficult when you break it down into small bite-sized chunks. I understand that not everybody can get technical analysis overnight. A lot of you will be watching this and saying to yourselves that you cannot do it. But what I would say is that I've built something that can take complete beginners and make them incredibly competent with technical analysis in the space of 4 weeks. So, like I said, if you're somebody that does struggle a little bit, you can stick around for a minute at the end. ARWR is big questions being asked of this at the moment. This is a descending triangle pattern. It's not a bullish pattern by any stretch of the imagination. Now, I know that many of you out there have done incredibly well on this. Long may it continue. Hopefully the 50 period simple moving average does hold for you. But I would be reevaluating my position if we break lower here. I know a lot of you will have given up profits on this move to the downside, hoping for a break higher, but we've actually got a break lower here. So you need to be very, very careful if you're out there and you're in ARWR. SailPoint Technologies has met resistance at a logical level of resistance. I think if you're out there and you're in SailPoint Technologies and maybe you've done well in this move here, I don't think you can do much more at the moment unless you're taking the valuation, you're into the fundamentals of the company, etc., which I am not. I'm purely technically driven in my approach. For me, makes a lot of sense to consider profit taking, and if you get a deep pullback, by all means, buy back in. But I think for me, we've got a clear breakout level here that I'd be watching above $27. Looking coffee, what can we say about it? It's on a bit of a rocket ship at the moment, but I think you need to be careful now. I think we've got a bit of divergence with momentum potentially. So yeah, I think that one makes a lot of sense just to keep an eye on it. I know many of you have done very, very well on this. Again, long may it continue, guys. I don't want to see you guys lose any profits. I want the market and all your stocks to keep going higher. So yeah, I think when you take a step back and you actually look at things objectively and you try to remove as much cognitive bias as possible, and you can be completely impartial with your technical analysis, I think that's where the magic starts to happen. I think when you get emotionally attached to these stocks, when you marry them, I know many of you have heard me say it a million times, I'm only dating these stocks, I'm never getting married. That's where the danger occurs, is when you get married. So Yeah, if you're out there with luck and coffee, hopefully it rips higher, but just be careful there. And Funko, I think this is another one I've been asked about. There's nothing immediately appealing about the chart. I did have to kind of work about with this one because I've been bearish on this one since we broke lower here. You could probably go back to September and watch one of my videos and just said, look, if you're out there, be very careful. And obviously that's what's happened. So I think for me to be bullish on this particular stock, I would want to see a break higher above $18 there. Potential cup and handle pattern, potential double bottom pattern, but this is going to take a bit of time for it to resolve itself. I don't think Funko is offering really any kind of risk to reward proposition at the moment. If you're out there and you're holding and you've bought in, quite high, maybe in there or in there, naturally I hope that it turns around and you can go back to making money on it again. But technically, got to call it as I see it, and I think above $18 is probably where you want to be looking at it. So guys, hopefully you've enjoyed this. Hopefully you've got something, maybe you've got a couple of extra charts for next week, whatever your deal is. Maybe you've picked up some technical analysis. As I said, I'm extending our New Year offer by another week. So if you want to have access to our trading ideas, which I'll show you just what that looks like in a second, if you want to have access to our incredible community, if you want to have access to our premium charting at the weekend, this is just my generic social media analysis. Although I understand that it's still very popular, my clients have been provided with 10 premium charts for next week that I feel like are worth considering, and you get 1 year access. Now, I've just put out to social media this week that I'm now capping the numbers for my subscription. It's now starting to get to a level where it's becoming very time consuming for me to manage the group. So I think for me, I'm putting the cap on 200 members. I would expect those numbers to be filled probably by the end of next month, going at the current rate. So if you are somebody that does want to come in and you want to be part of what we do, maybe you want to learn technical analysis, I would suggest there's probably just a small window left for you to do that before I obviously shut the doors, and it's going to be an annual thing where I'll open things up. That's really the way that I see things going. And if this is your first time that you've maybe come across me, my work, I'm Sam. Like I said before, I'm registered with the CMT Association, working my way towards chartered status at the moment, working my way around Asia at the moment as well, just to kind of get away from the Scottish winter. And I run honeystocks.com, super well known technical analysis trading school. My work is featured everywhere now, it seems. But the really cool thing about what I do at honeystocks.com is for every single trade idea that I put out to our group, I log them on my website for complete and open transparency. So you can go onto our website. I've obviously got 2019 there, 2018 is there as well. You can go and see every single company, the date, the price, how it's performed thereafter, and you can go and scrutinize that. And if the types of stocks that we're selecting fit with your own profile, I don't do penny stocks. I'm not doing stocks generally less than $20. We've got a very quality over quantity approach. I'm not someone that you're not signing up to a WhatsApp group and you have to watch it and monitor it all day. I try to give at least 12 hours notice for every single trade idea. Very clear parameters in place. This is an alert for Nike recently. As we can see, risk to reward all mapped out. The entry, where to place the stop loss. This is one for Starbucks at $80. Again, Everything's completely mapped out. I also provide charting support with my service as well. So if you need a second opinion on a chart, you know, I'm happy to provide a chart like this for ARWR, which, as we seen a second ago, this kept one of my guys in a trade. And it's also, you know, trading at $60 now, and you know he's done very, very well in that. ENPH again, 18 bucks, and you know, off it is. Huge risk to reward proposition. You know, this is at $31-32 now in the space of a couple of months. You know, so that's been a huge, you know, 100% plus winner for many of my guys, and for some of my guys that have done options on it, it's been even more. So that's really a bit of a background to what it is that I do now. The other thing to maybe point out as well is I'm with the CMT Association. I also have a code of ethics to follow as well. So everything that you see on my website with regards to trade ideas, that is all indisputable fact. There are some stocks, some charts that I have posted recently that haven't been uploaded to the website yet. The reason I do that is so I don't upload them, you know, the second I post the chart, because then, you know, you guys could just monitor that feed and just wait until I post the chart. So I do wait a few weeks before I upload the charts, etc. So that's something to bear in mind. But if you're out there and you're trying to get away from day trading and you want to come in, learn technical analysis, just be part of an incredibly cool group of traders from all over the world, mega successful traders as well. It's not one of these groups where 95% fail like every other trading group. I've got an incredible group, incredible community, and we all share largely the same approach, which I think is super important. So yeah, follow us on YouTube. If you're somebody out there and you're constantly trying to find all the content and filter through all those YouTube videos, trying to find the holy grail, I would suggest that it would be a lot quicker for you to just come in and obviously learn what we do, because ultimately the tuition cost of the stock market is going to be paid in the form of losses, and that is the most soul destroying aspect, and it really, really doesn't need to be that way. So if you are open to maybe learning a new approach, learning a new way, a consistent, quality driven approach, feel free to jump onto our website and check us out, or click the link below. You can register your details if you want to go ahead and proceed with everything that we do. But yeah, I have got to get back to Japan. It's an incredible place, and enjoy the rest of your weekend, guys, and maybe I'll welcome you soon. Thanks again.